head of business development at Cavendish Trust. So I was just thinking, we had this little workshop earlier in an investor workshop, so it's going to be a nice continuation of what we've sort of started. And it reminded me of something when I sometimes go boating on my brother has a boat in Florida, and it has a little placard on there. It says, this boat runs on gas, not thanks. And sometimes it seems like the new space industry can be a little bit like that, and you know, it still, at the end of the day, takes human or financial capital to make a startup happen. So I'm going to jump right into it. So first, we're going to have Tom do a little introduction on, I guess. Well, I won't ruin the. Okay. Well, I'll let you do it.
I'll get through them quick.
Yeah.
Things over here. Okay.
So we're going to move slightly to see these slides for a bit.
Yeah.
Nope.
This has been working all day. Okay, here we go. Okay, thank you. Okay. Yeah, I call it "What's an Investor to Do for Space Company?" He said on the original Space Cynic. I could also call this presentation "Why I'm Not Real Fond of Launch." There's a lot of reasons for that. Now, let's see if I can make this thing go. There we go. Lessons learned in my life. I was part of a startup called colonyfund.com back actually it started at the end of the 90s, and our idea was to get excited about all the new things that were happening in space at that time and start an exchange-traded fund. And now this thing is just flying away. And that's actually kind of my favorite slide, because this is the lesson that I learned from doing the original due diligence on a lot of the companies that were springing up back then, and from then on, was that they were always saying the same thing about how as soon as we get our money, then we'll have a press release, then we'll launch our product or service, and in a couple of years we'll have that lovely hockey stick graph of profits. And it just never seemed to happen. I've got this industry is just littered with a trail of wreckage of companies that have tried to meet up to their own expectations, and it's just not gone very far. And now you'll see how the hockey stick keeps getting pushed back and back and back. This is how we kind of screen deals now. We've learned a lot from the things that we've done with my learning curve at Colony Fund, the work that we did with, and Robert was involved in this too, the Space Investment Summit series, which did turn for a while into a short pitch event. And now, of course, this is also what we do now with the NewSpace Business Plan Competition and the Lightning Pitch event you just saw today. All of a sudden, we're putting some real skill into trying to hold new startups accountable to certain types of core business principles, and we're going to be watching for them and helping them along in that regard. So what are the opportunities? What am I working on right now? Again, since I'm not a big guy on launch, there's a lot of other people that do that. I'm working on other opportunities, although I am involved in my consulting practice with a couple of companies. They're in the space area, which I thought were really fascinating opportunities. I'm helping them doing business planning and development, and then helping them make some connections. But they are not launch companies. I'm not going to mention their names because we're still, there's still contracts pending, so we'll have to wait for the press release. But this is my path today started with the Space Investment Summits, where I was reaching out to investors and other people in my network and saying, how would you like to attend this thing and see what's going on? And the response I always got from many, many people, the pushback I got was, space is too rich for my blood. And they say that because what they see around them are companies they're still building up at the time, like Virgin and SpaceX and Blue Origin, where each one of these have been led by people who have very, very deep pockets, and they earned it in another industry, sometimes related, sometimes not, but they spent hundreds of millions of dollars in some cases of their own passion money to build what they were going to build. And that's still in a very large way the case today, although there's a lot of smaller launch companies are springing up, and they want to launch CubeSats, they want to do other things. It's not a crowded market by any means, but it's not always the most thrilling thing for an investor point of view, because they're not seeing the back end. They're not seeing the exit strategy very well compared to the opportunity cost of investing in other things. So I took a look at this. And this is kind of the things that we discuss at conferences like this, is we discuss the launch part of it. Now, which is fine. We need to solve that problem. And there's a lot of people working on solving that problem. The issue is, for me, is that we have 999 other problems that we need to solve if we're going to be permanently a spacefaring interplanetary species expanding out into the galaxy. And the other problems we need to solve look something like that. Now, the good news is that entrepreneurs solve problems. They do it all day long, and they do it in ways that provide market value. And there's a lot of opportunities, potentially, in a space or a space-related type of market that doesn't involve launch at all, and the cost of getting in is a lot lower, and the risk tolerance is a lot better, but they're still solving a problem that we're going to need to solve to be a spacefaring species. And some of these problems I've listed here. Sustaining life, energy, health, resources, communication, and transport. There are probably more. Your mileage may vary, but I broke it down into that. And I started breaking it down again and saying, okay, where can we go with that? What do we need to come up with to solve these kinds of problems? And these are just some examples I'm just showing you really quickly. And this became a concept that's a core part of our consulting practice at Exodus now, and it's so important, I thought we would trademark it. And really the idea of a space scalable company then is a company that's actually originally planned to develop a technology that is going to be originally deployed right here on terra firma and solve all sorts of interesting and vital problems here on the ground, but they also have the potential to solve a problem in space when the need is there. It can be tweaked, twisted, turned in some way, and that's actually going to solve a price problem. I have two examples here, and both of these companies were actually a finalist in the business plan competition in 2012. Terrapio is developing a substance that is deliverable via IV, like a bag, and it helps mitigate cellular damage from toxins and/or radiation poisoning. Their idea was toxic spills, things like Fukushima, and they're in testing now. And when they gave their presentation, actually someone from JSC was in the audience. He kind of looked at them and goes, we could use that. And they made a lot of contacts as a result of that presentation. The same thing with Nanoli. They're also a biotech company that developed a system of preserving injectable medicines that don't require refrigeration or thimerosal or other types of toxic substances, and they can be stored for years and years even. And now thought for a long duration space mission, something like that would also be very, very useful. So these are an example of what a space scalable company is. Okay, so what does this mean for investment terms? Again, when we're looking at launch, we're looking at something like, okay, here's the ball there represents the relative amount of available investment dollars, and you probably need at least 2 commas in your investment, and a significant 2 commas to make any kind of a difference in that area if it's just space. But if we have space-related things that kind of go around the space industry, and there's a lot of things, and you can do nanosats and other communications things, software, other types of things that are around the space industry, there's a little bigger investment pool available for something like that, and the amount and the entry cost for an investor is a lot lower. But when you consider space scalable, when you consider industries like nano and biotech in particular, all of a sudden the pool gets very big and the amount of entry-level money gets a lot lower. And so part of my mission in life now is to explain this to people like you and investors in the room, to maybe they're already investing in a space type of company and they didn't even realize it until right now. As an old spiritual teacher of mine once said, awareness is a bitch. Now you own it, and now you can spread the word. Really the word is something that engineers and scientists have understood for decades. Space is context, and instead of being the poor stepchild out here, knocking on the door trying to get in, space can be context for just about any other thing we do industrially in a business way in our society. So I just wanted to give you that little intro.
So let's jump in. Why space now in 2014? If you're an investor, and Esther, you've been one of the longest new space investors out there. You know, you've diversified, working in media, focusing a lot on healthcare now. But if you were to sort of guide new investors who maybe had little experience, what would you shed to them, as well as the potential entrepreneurs in the room?
Yeah. Well, I mean, first of all, the almost the only way to be successful as opposed to lucky as an angel investor is to invest in a lot of things. I just have a company that I don't know much about it, but I believe the founder just posted on his blog the tale of his deceptions and et cetera, et cetera, et cetera. I got a press call, would I want to talk about this company? And candidly, I'm not sure. But what I would basically say is, for an angel investor, frequently the cost of doing due diligence is about equal to the cost of making the investment. And you should invest in that spirit. You know, it is a crapshoot. For a serious investor, your trick is not to pick the winners, which is what I heard somebody say this morning. It's actually to find companies capable of being winners and helping them to get there. Because there are very few space companies in particular that have the management strength, the connections, the experience, the understanding of the market they want to disrupt, or, you know, companies aren't born winners, they're created winners. So the first is something that's really not unique to space, though the challenge is probably of, you know, unproven business models, unproven people, a culture that is closer to engineering than to management and sales are all there. On the other hand, it's a lot of fun. You can get the odd winner, and if you know, depending on what you're doing, launch things like Space Adventures, where not only was I an investor, I was a customer. X-Core, I get to fly the last flight before they start asking people to pay. You know, there are these deals you can get in small companies that you don't get in a much more kind of official, formal market. We're still not a market where most people invest just to make money, for better or worse. And I can go on at length, but that's my introduction.
Tim, as a business service provider, and you're based in, focused on helping businesses set up shop in Isle of Man, are you guys actively, in terms of your recruitment process, when you're seeking new clients, are you finding that the deal flow has increased in terms of new space companies coming to you? I mean, you have about 30 space companies right now set up shop there?
Yeah, we're finding a lot of interest. Just interested to reflect on the comments that have been made by the other panel members. I mean, we find really you almost have to take the space out of the business. I think sometimes there's too much emotion on the space side. It's a case of people bring an idea, and because it's new and it's space, you've got to believe in it. And I think you've really got to go back to basic principles and look at the idea. Is there a market for that idea? What's the skill of the people behind it? Have they got skin in the games themselves? Again, quite often you find that people come with an idea. They've got the idea, and they want you to put your money in the venture. But actually, if it all goes wrong, they just walk away and then create another enterprise. So again, it's going back to business basic principles when looking at these ideas and stripping out the sort of space emotion.
So creating a good business, not a good space business.
Yeah.
I mean,
yeah,
fundamentals.
Yeah, it's the same thing. Is there a product? Is there a market? Are there people who can make the product and sell it to the market?
I know from several years ago there was a business plan competition. I don't know, it was I think it might have been at Ames or somewhere else, and there were some interesting ideas, but I think the pitches have just become so much tighter, and I think that the entrepreneurs in any industry have become so much more aware. There's so many free resources available on like how to make a great pitch. I mean, you just type that on Google and you'll probably get 10,000 results.
And I'm amazed. You're absolutely right. And to some extent that's true, but I also get incredibly unprofessional pitches. I get letters that say, we want to send you an idea, can we do that? And, you know, you're taking more of my time answering this letter than you would do if you just sent it, so go ahead. But for those of you who are startups, first, I'm not investing right now. I'm funding a not-for-profit health thing. Second, the only way to get people to pay attention, I mean, there's probably one or two counterexamples, but you have to have someone who knows you plead your case. The funniest letter I ever got as an investor was from some guy in Britain. He said, "Dear Esther, my aunt saw you on the telly and said I should write to you."
And?
You know, charming, but no, I did not invest.
I mean, there was a famous statement from Warren Buffett who said that really what investors need to do is concentrate on the 1-minute elevator pitch, the 1-page executive summary, the 10-slide presentation, but then demonstrate intelligence, energy, and integrity. And again, but it's fairly simple and basic, but as Esther said, it's amazing. You can look up how to do it, but actually getting those pitches in the right way that demonstrate those key deliverables, it's amazing how often that doesn't happen.
Yeah, and if they can't pitch you right, you kind of wonder, well,
Exactly.
how are they pitching their customers if they get my name wrong? You know, whatever.
Tom, what about your experience? I mean, you've been sort of through the space investment summits, the different business plan competitions. I mean, where are we at in terms of the quality, telling the investors, I mean, set the expectations?
Well, it was all a learning curve all the way through this process, starting back in the days of the Space Investment Summits. The first one or two that we did, it wasn't even a pitch event, it was an educational event. But then we took a plunge and did our first pitch event. It was like we had panels in the front of the day and then, you know, short 5-minute elevator pitches at the end of the day. And it didn't go so well. I mean, there was a learning curve involved in this, and we really learned better ourselves how to screen potential companies who want to make a pitch at an event like that. I mean, obviously the goal of anything we do here, and especially stuff that, you know, I and my team have been working on for the business plan competition and even in Exodus Group, is deal flow, is getting people together and making those things happen.
Better?
And making them better, absolutely. Now that's one thing I can tell you about, because we did our first, I mean, the first BPC that, you know, I was head of was in 2011. That was at Ames. And we had our first $25,000 prize. Well, some of the VC guys who were in the room, you know, came up to us and says, you know, if you guys could do a $100,000 prize, that's going to get a lot of attention. And by God, we managed to come up with a $100,000 prize the following year, and it did get a lot of attention. And the quality of the applicants, surprise, surprise, went up significantly, and it stayed there. So yeah, these things are improving quite a bit, but it's all because a bunch of us, you know, had the dedication to stand up there and insist on that high bar that didn't exist before.
And for the entrepreneurs out there, outside, when the business plan competition doesn't, when it's over, it's really not over. There are so many resources out there right now for you, whether it's Space Angels Network, what Tom's doing with his consulting group, what Sean Casey's doing here in Silicon Valley. I know in Colorado they're doing work. There's really lots of relatively low-cost resources, and just something that people ask about, like entrepreneurs, if they've got the money committed, they're talking to several investors, and usually it is no until you have the money in the bank. Even if an investor says yes, still consider it's probably not going to happen until the money's in the bank. It's just so many times you'll get people, they'll give you a very passive yes, and that doesn't really mean anything until the money's in the bank.
But they are not cheap, but probably the most valuable resource if you're most likely a technical founder who wants to be CEO is a good COO with business experience. And personally, I've had 2 companies And I haven't been the CEO of either of them, and it's been a blessing because you hire someone who knows how to run things, and then you get to do the fun stuff. It sounds counterintuitive, but the reality is being a CEO is hard work and fairly boring. You need to deal with real estate and managing people and all the stuff that if you have, I don't mean this dismissively, but if you're the visionary type or you're the engineering or design type, you probably don't want to run a company. It's actually not as intellectually challenging. And in many cases, people's egos get in the way. They want to be CEO. Bill Gates was CEO. That's who Art Dula talked about. He didn't talk about John Shirley, the COO. But if you can find someone better than you are at running your company, let them do it.
And potentially recruit from outside of the industry.
Yeah.
And probably this industry could benefit from some of that. We were discussing that in the workshop earlier.
As an investor, I find there's not enough management talent in this industry yet. And it really is very, very important because as an entrepreneur, your job is to build a company. It's your company's job to build products or design services or whatever. And finding people who can build a company while you focus on building the thing that got you excited in the first place makes life easier for everybody, including your investors.
Are there any investment flameouts, failed attempts, doesn't have to necessarily be in space that you have had, could be in participation of time or money that, and you look back now and said, I would have done this differently. Maybe I could have had a difference as a, advisor, investor, and this goes for any three of you here on the couch.
I have a long list of mistakes.
Well,
Everything from insufficient capital so that you then have to raise money again too soon. If you raise money at too high of a valuation, your current investors don't want to raise more money at a lower valuation. And cap tables and investment structure, that's the kind of thing where you want someone who's experienced because it's complicated and not something you would necessarily know. I've made mistakes picking people. I've made mistakes falling in love with an idea, even though the team wasn't capable of executing it. Timing matters. The same idea a year too early or a year too late after someone else is doing it effectively. It's not that an idea is intrinsically good or bad. It needs to be well timed. It needs to be executed in a market that wants it. There are all these factors that are really important, and as an investor, you can fall in love with something and make huge mistakes.
Tim?
Sorry, I was going to say,
Yeah.
I've come across some examples where people have had a good idea, they've taken it so far, but then it becomes obvious that they're not actually capable of taking that to market. And people will have a word with those people and say, look, with respect, you now need to sell this on. You're not actually capable of taking it to the next level. But they're so precious about it. It's their baby. They're unwilling to let it go. And in many, many times I've seen that happen. And then the thing's just crashed and burned because they wouldn't let go. They wouldn't let go of their idea. They wouldn't sell it. And sometimes people are too precious about what they've invented, and they're not willing then to let go for their own good and the future of the product.
I want to maybe just start with just getting right into a few audience questions or internet if there were a way, but I don't know if they're monitoring the comments on the YouTube page. So is there anybody in the audience?
NSA has a question.
Who?
NSA.
Voice, NSA. Somebody wants to come down to one of the mics on either side of the aisle. Has any questions? None. We have a very...
We'll just keep, yeah.
We've
Okay.
answered
That's
everything.
good. That's good.
Okay, yeah.
Yeah.
Step on down. There's no mic, then just that mic.
Try over here.
My question was just, what are the near-term investment opportunities that you guys are excited about?
Okay, so the question is, what are the near-term investment opportunities that you guys see? Tom?
Well, for me, again, because I'm not a big fan of launch, there are 999 other problems we have to solve. That's okay. You guys worry about launch. I'll take those. But the opportunity I'm looking at now is mostly in nano and biotech that it could be related to this industry. Anything involving communications, energy storage, better batteries, better data storage, things of that nature.
So I'm on the board of XCore, as you think you heard. I'm also a very proud investor in NanoRacks, which I think is a great model of, there are things beyond actually doing launches that can really add value. NanoRacks, in a sense, manages the workflow for getting things onto other people's launches. Today I heard Aaron Kramer from Made in Space, which is 3D printing in zero gravity. I thought that was really exciting. But more than that, though, I don't know who's doing it, and this is an invitation. I think if we do 3D printing in space, you're going to find a really interesting market for materials, because even as 3D printing to some extent makes design more of a commodity, it makes the quality of the materials that you print really important. Alex Hall was talking to me today about inventory management on the space station and elsewhere. During my space training, that was one of the things they gave us a course in, believe it or not, and they told us how terribly it was done. And 9 times out of 10, if you look for something, you just need to go to the air intake valve and it will be stuck on the grate, unless it's small, in which case it's gone forever. So those are two of the very non-sexy things that I think are actually quite interesting. And I'm a big fan of synthetic biology, because I think the way to terraform Mars, and someday to terraform Earth, if we can do that politically, is actually to design plants that will help us create an atmosphere, among other things, food as well.
Just building on Tom's point, really, I think you get away from the launch side, getting things into orbit. There are people working on that. That's sort of work in progress. It's the other problems, and more often than not, the other problems that we're looking to solve will have terrestrial applications as well. So it's not a case of just making it work in space. If it works in space, there'll be other ways that that technology or that solution can be developed on Earth, which then gives actually a much better rate of return on the investment.
I think we had one over here.
David Gump with Deep Space Industries. There's a lot more public awareness of commercial space now, but most of that's linked to billionaires. Do you have any sense as to whether people are becoming aware of the NanoRacks and the X-cores and thinking that that's an area that they can play in?
So in addition to people who know how to manage, we need people who know how to market. But I do find there's, the interest in space still tends to be, oh, gee whiz, I want to be an astronaut, as opposed to, oh, gee whiz, I'm an accountant, or I'm a solicitor. There's still not that much understanding that this is actually going to be a marketplace where you can have a job other than being an astronaut. And I think it's really important for that to happen, in addition for investors to be aware of the other opportunities. It is starting to happen, but we need to get better. I mean, when people stop going to space conferences and go to other kinds of conferences and find space there, is when we will have succeeded.
And actually, to tie into that, this is something we've also been working toward anyway, is making that presence felt at other conferences, whether it's an IT tech conference or a nanotech conference or a biotech conference. We are starting, some of us, to reach out in those ways to let them understand that, hey, space could be part of your context as well for the things that you're doing. It is a big problem still in our industry that, as far as the PR and the public outreach and getting larger amounts of people at least looking at what we're doing and having an interest in it, that's always been very difficult. We're getting a little bit better at it, but we need a few more victories before we start getting some real mass acceptance of what we're doing.
So in a way, it's a real community effort. It's about expanding the entire community and creating communities. I mean, this is a community in Silicon Valley, all these different communities, and we need to really branch out in whatever ones, whether it's, you have connections with biotech, You have an option, to be interviewed with a local newspaper. I think really anything that we can do kind of at a tactical level, all to try to build awareness so that there's an attraction, not just that this is a quirky little group that's kind of interested in space. You got to really make this compelling. It's got to be compelling, got to be potentially profitable, or have some type of return on that investment. Maybe back to some other challenges within NewSpace, the lack of market transparency. And there's a lot of secretive nature about things, and if you've ever tried to, sometimes whether it's doing due diligence, learning just about a business plan on the company, investors tend to not want to and are not willing to sign NDAs, so I think a lot of entrepreneurs need to understand that and the reasons why that doesn't occur regularly, unless once you get to a certain part of the dating process and then you're pretty deep in and you're like, okay, I'm going to do this, I'm okay with signing something. But early on, investors tend to not sign NDAs, so don't ask them.
Well, yeah, I think part of that too is burnout, because I don't know about Esther's experience, but I must have a stack of NDAs this high from companies going back 18 years that never went anywhere. And so after a while, you just get sick of that whole process. Why am I wasting my time? And
I don't sign them as a matter of principle, because I think it sends the wrong message that the idea is where the value is. And I mean, it's not that I've never ever signed an NDA, but in general, I just think, as we've been saying, it's the execution and the people and everything else, not the idea. But the lack of transparency, it's not just about, oh, my secret. It's also, again, a much broader, this is not a public market, so you don't have investors, you have very few investors, you don't have financials. It's very hard to understand the shape of a marketplace. Who's got X% share? How do these 5 companies differ? Most companies will tell you they have no competition. And that's actually a bad sign, not a good sign. It means, well, maybe nobody wants the thing you're selling. How can you prove to me that somebody does want it? I want to hear that you've got competition, but this is why you're better or cheaper or selling to a different segment. How do you position yourself against these other people? Because that shows me you understand the marketplace you're in. You also understand your unique capabilities within it. You may have some sense of the market size, and for sure, after 3 years, I hope you're going to be in a different market or in other markets, or you'll be creating a new market. But right now, this market looks more like a map of the sky at night with little points of light in it, and what we want to see is a clear map that looks more like the surface of the Earth.
Yeah, I mean, I think having the transparency is important. You've got to have that trust between the investor and the inventors of the product. Like Tom, I've signed loads of NDAs. Very, very rarely has there ever been an issue with an NDA, because more often than not you find that, well, first of all, you have that trust. It's nearly always respected. But in any case, the people who are bringing the idea to you, it's very difficult then to, in theory, then to pass it on to replicate. It's the risk of not having an NDA is not that great, I don't think. It's more of perception. It's more of an insurance policy.
Oh, well, the other thing is like some of these companies, and it still happens, they bring investors in, but then their attitude seems to be, okay, thank you for investing in our company, now stand back and watch us fly. And this is where the transparency starts to slowly kind of darken over time, because then all of a sudden you're not seeing the kitchen table accounting methods, they're not doing regular reports like they're supposed to, they're not having regular board meetings like they're supposed to, and a lot of other things can go bad very, very quickly.
Which is often a sign of trouble as well, isn't it?
It is, but they're also missing a fundamental value of having the investors in the first place. If you pick the right investors to invest in your company, they're going to be a great, great help to you. They can bring, if your team is a little thin, but they love your concept and they love you, they will help you fill in the blanks of that team. They will find people for you. They will advise you. They will introduce you to their friends.
They'll edit your press releases.
That too.
I do that all the time.
Yeah.
Tim, were there any of the lightning pitch entrants that you thought were particularly compelling, or you can talk about maybe overall flavor if you don't want to get anything specific.
Yeah, I mean, I think there's some good ideas there. I mean, obviously with lightning pitches, you get that initial sort of excitement about what some of the ideas may be, but I'd need to go into the next level really just to sort of scratch away the surface and see what's beneath it, and really to see whether there is that uniqueness of the idea versus competition, you know, the true background to the people who are behind it, what funding they've already got in place. So yeah, I mean, I think the lightning pitches is a really good way of starting, but I'd need to go to the next level really to evaluate their potential.
And with like the recent announcement, the UK spaceport and all the benefits of being an Isle of Man, maybe some of these space companies should just be talking to anyways, just to be learning about where they should potentially be setting up shop. Because I know we had some from a pretty wide, diverse geographic areas.
Yeah, it's an interesting question. I mean, I from my experience, I find that when people have the ideas, they look for where the investment may come from, but invariably, wherever that investment comes from, all else being equal, they then tend to have to go and set up there. The investors actually want the people close by. If there is flexibility in terms of location, then the location is important, particularly if that business is going to become successful in the longer term. You want to make sure that you're in the right jurisdiction from a regulatory point of view, from a tax point of view, that you're going to be able to get easy access to orbit if it's has a launch element to it in. So again, it's important to look at all the variables in the medium to long term, not just the short term considerations, because as I say, once that business flies, and if it does fly, then that's when you'll experience the problems if you hadn't done the homework properly initially.
Thank you. I want to go back to the audience for some questions. Do we have it's the end of the day? Yeah, okay. Yeah, both you guys.
Yes.
I
This
miss
is
the
end
days
of the
when
day
I
that-
miss the days, Esther, when you were perched up on the couch. Do you remember that? Do you remember that? It was a higher back.
Hi, my name is John Carrico, and one question that I've heard a lot, just wanted to get your thoughts there. What do you talk to investors about when the return on investment might be 10 or 20 years because you're trying to do such a big thing?
You do that with great difficulty, candidly. One thing you can do is try and figure out how to do it in stages that will increase your value with each stage. But you know, it's very hard to give a good answer without specifics. In general, it's not going to work unless you have someone who's more of an enthusiast than a financial investor. If you can give a clear path, you know, invest this amount for the next 5 years, at which point our value should be this much greater, and then you can invest for the next 5. But it's got to be a pretty convincing story, especially in a world where very few things are the same 5 years from now. So, I mean, it's amazing. You make that kind of gamble every time you have children, for example, but investors are driven by different motives.
Well, again, in most cases, if you're looking for, if you're an investor, you're looking for a 3 to 5 to 10x exit in 3 to 5 years, you're going to be hard pressed to find a kind of a deal like that in many areas of the new space economy yet, and maybe not for a long, long time. But again, as I spoke to in my slides, there are other places you can go which will have an impact at solving space problems, and the entry price is a lot lower, and the potential for a successful exit is a lot higher. So there's the opportunity cost that anybody will look at when they're getting into this kind of area. So far, this area, especially regarding launch and related types of items, it's still big ticket stuff, and it's guys with deep pockets and a lot of personal passion.
Yeah, and they're billionaires, and if you're not a billionaire, it's hard to do that kind of thing. And the challenge with the billionaires is they want to do their thing, not your thing.
Two companies, they give examples who are like Clyde Space, which is a CubeSat company out of the UK. they didn't take any outside investments money outside of maybe some friends and family for quite a few years, and they just kind of bootstrapped it and built their business incrementally. And Xcore, which I think their first product was an igniter, that, you know, they had the dream, but they started off something really small. Where can we find business today?
Yeah, Rocket Racing League and
Rocket
stuff
Racing,
like that.
yeah. And how long is that? I mean, Xcore, is it coming on like if it's 12th, 13th year, something like that? I mean,
Yeah, it was already, I joined later, and so it's been a while. And
there-
things are going well, but it's been very step by step.
But they're still out there. I mean, they're just closing they're getting ready to close their B round right now. That's significant.
Yeah.
That's 8 figures.
And,
That's
right. And I'm hoping to go up pretty soon.
Yeah.
And you'll hear from Jeff for the official story later in the conference.
I was wondering if, as investors, it would help you if you had a program where you could input the product and then associate variables during the course of time and see what might be useful or helpful for keeping the product into a rise or keeping it alive, sort of. Do you have anything like that? Like a computer program?
So what you're saying is almost like an online application to investors to see whether investors are going to be interested. Is that the question?
Yeah.
Yeah.
Mhm.
Okay. I mean, I think yes, that is obviously technically possible, but I think what investors are looking for is more that personal approach, how it's pitched, the background to it. I think if it's going to be online, you're not going to really get that same feel about the people who are behind it. I think, as Esther said before, you know when you're impressed by a particular pitch and when you're not, and a lot of that relies on the way it's pitched to you. Whereas if it was standardized online, you wouldn't pick up that sensitivity that allows you to take that decision on whether it's a good idea or not.
Well, the first quantum computer is just down the road here, so maybe that would be useful in making the kinds of calculations that you're kind of referencing.
Yeah. But honestly, if you allowed me to know 5 facts about something, and then I would have to either invest or not, is a very easy decision. But if somehow I had to make a binary decision and I'd lose money one way or the other, I would be much more interested in the experience of the management than in the idea. If you can fix the idea. I mean, it's actually interesting. If we should be investing equity in individuals and just get a slice of their career, you'd probably end up with much more predictable investment flows than if you invested in companies based on the ideas. Because it's the people that actually make these things work, and you can follow people through several companies. Sometimes the first 2 are educational experiences, and then once they've got that learning in the first 2 companies that didn't do so well, you have real winners.
and there is capital out there. I mean, we should look at just a little bit of near-term recent history. In 2013, there was over $200 million of private money put in different early-stage space companies, and you have crowdsourcing, which is one way of financing, debt, angels, venture capital, private equity, and acquisitions made by other companies, like what we had with Google acquiring Skybox and Titan Aerospace. So there are events happening. There are some investors getting some type of return. I don't know what the deal details were, but like Esther, can you speak a little bit with when you had like Space Adventures? Wasn't there a merger with Zero Gravity Corporation?
They bought Zero G.
They bought.
Yeah, I just want to say about crowdfunding. One of the problems with crowdfunding is you don't get a board of directors with it. You don't get smart investors who have enough skin in your game that they will come and help you. And in theory, that means, they're not going to interfere, which is great, and maybe they're your customer base. But the truth is, smart money is really worth a lot. Anyway, sorry.
But from an investor's an entrepreneur's perspective, when they're maybe a little bit desperate because they're hungry,
Yeah.
and they just think, wow, maybe I could raise $100,000 to get this, you know, as market research done right now.
Yeah.
Should they take it
Um,
if it's non-dilutive?
Well, of course, they should take it from their point of view. For me as an investor, as someone looking at the market, is that likely to lead to success? Probably not. But, you know, the whole, look, if there are 30 of you out there who have startups, most of you are going to fail. And on the other hand, if you listen to my advice and you don't try, of course you're going to fail. So the whole point, all these things, all these barriers, all these obstacles, all these rules are there to deter the faint-hearted, and they should pay attention to them. But the people who succeed, you know, it's not drop out of college and do everything wrong. But the reality is being successful is a fluke. You have to be lucky, and then you have to be smart. So, you know, in the end, if you think you're the one, sure, take crowdfunding if nobody listens to you. You're probably wrong, but you might as well.
I heard a nickname from a colleague of mine on what crowdfunding is. It's a charity for venture capital. It's kind of
Well, I
dark.
got to say something about that, though, because this is a new phenomenon that is coming up, and we might as well just put it out there and think about it and where it's going to go. Equity crowdfunding is here, and let's learn how to deal with that. More and more groups are springing up. They're using a crowdfunding kind of model. Companies like Fundable.com and other companies there actually, and they put together a coalition of accredited investors to take part in this, and they're allowed to do this because of Title II of the Jobs Act that just kicked in this year. There is a Title III that's in the pipeline that would actually would also be an equity crowdfunding opportunity for non-accredited investors. I don't know if that is going to fly or not. I don't know if that's advisable for non-accredited investors who don't show that little bit of sophistication to know what they're doing. But these things are springing up all the time, and new groups and they're looking for opportunities, and there might be opportunities out there for you, but you really got to manage yourself carefully, because Esther's right, they're not going to help you. So, and which means you may have to do the due diligence yourself on the investors to make sure they are in fact accredited, because it'll be on you if the SEC looks at the deal and said, well, this guy wasn't accredited over here, so we're going to unravel the whole darn thing.
Also, there are now these angel investor syndicates which are springing up, and you know, from my point of view, again, investors are just like startups, as you said. Do your due diligence. Some of them are really great, some of them are useless, and some of them are actually evil. And no, I've seen it. They will.
Wow, evil.
They will put money in, and then they will somehow get you into trouble, and then they will, it's called a cram down. They will buy in at lower and lower prices because they have control, and it's.
I have a public service message. Esther Dyson is an outstanding member of the Space Angels Network. We love her, and hopefully she will remain in good standing and not say anything of ill repute about any of us, our activities. Thank you.
Whatever. Yeah, not Space Angels, but out in the world. It's the world's complicated.
So doing due diligence goes on both ways. So really it's interviewing and knowing, doing some, just don't be naive. And we've got to wrap up soon. I don't know if we have time for one more question, and then I want some concluding thoughts from my terrific panelists. I'll start with you over here. Okay, I'll just repeat it. So it's your question.
Like small satellites. Basically, you mentioned Skybox. They have one satellite, and they received $500 million from Google. Is there a paradigm shift in space investment that you're finding, where you have like a cross-pollination of technology that allows you to accelerate your investment timelines, or?
You know, for every Skybox, there's probably 50 other guys you never heard about that crashed and burned and lost everything and their investors' money too. So I'm not sure if there's a paradigm shift yet, really.
You don't think? Okay.
No.
They still call it venture capital.
Yeah.
Right. My question is about, so I'm Chun Yang from SES. So my question is about corporate venture capital as a viable investor for NewSpace. So we see in a lot of other industries, you know, the big, for example, just the pharmaceutical industry, the big pharma has set up corporate venture arm, invest in a lot of biotech companies because they see it as a threat to their business. So do you see, you know, traditional space operators or space industry companies setting up their corporate venture capital funds to invest in NewSpace? And is it a good thing for NewSpace? And how do we, you know, attract that pool of corporates as investors?
I think if you're an entrepreneur, you don't go out there thinking when you wake up in the morning, what am I going to do to, you know, keep this guy away or attract this person? You're just going to do the best job you can as an entrepreneur. I mean, that's my 2 cents.
Yeah, that's pretty much what you do. I think you were talking about also the possible conflict between traditional, if I heard this right, more traditional launch companies and the new guys that are coming up, and how do you manage that? And I told people 10 years ago when everybody was jumping up and down and NewSpace is great, we haven't built anything yet, but NewSpace is great, and Old Space will never catch up with us, and they're just dinosaurs. And I let them know, look, even a super tanker can make a U-turn given enough time and enough dedication and enough patience. And sure enough, ATK is coming on board, joining our, taking part in our industry. Boeing is building a private commercial capsule, and a bunch of other things they're going private with. So,
but to send you back your own message, it's more than just the launch companies. For example, if you're doing materials, there are materials companies who are not space oriented that might be great investors, or pharma companies might be interested in something to do with something where they could test their drugs in space, or there's lots of industries that have a space, some kind of relationship to space, or that might be great investors. And the thing about these industrial investors is they tend to have interesting capacities, whether it's a distribution channel or research expertise or something like that, depending, again, these are very specific questions about specific companies and specific industries, but they can sometimes be great investors and sometimes not. And there, again, a lot depends on the personalities of the individuals and the personalities of the companies.
We're going to have to wrap it up, so I want maybe just 10-second, what's the takeaway from, what do you want everybody to leave with?
Well, my takeaway again for the investors in the crowd, if you don't have $100 million to put down on a launch system, take a look at putting $100,000 down on smart fabrics, or a better battery technology, or something else that we know is going to have a space use and maybe solve a critical space problem, but where the entry price isn't so high, and you have a chance in the short run to actually make a boatload of money in the terrestrial markets, because that can then be recycled, and we can go up to more sophisticated things and build out from there.
And my message is, you're going to hear lots of free advice, and your biggest challenge is figuring out which advice to pay attention to and which advice to ignore, so good luck.
I guess my takeaway is, if you're looking to raise money, just concentrate on those basic business principles. Get that right. Do your due diligence, before you step too far. Just go back to the core principles.
So I want to thank Tim Crane, Thomas Olson, Esther Dyson for contributing their energy and time today. And I also want to thank the few people in cyberspace that contributed some questions, audience, and thank NewSpace 2014 for having me moderate. And that is concluding today's session. Thanks.
Thank you very much to our panel. That concludes today's program.
Now, the good news is that entrepreneurs solve problems. They do it all day long, and they do it in ways that provide market value. And there's a lot of opportunities, potentially, in a space or a space-related type of market that doesn't involve launch at all, and the cost of getting in is a lot lower, and the risk tolerance is a lot better, but they're still solving a problem that we're going to need to solve to be a spacefaring species. And some of these problems I've listed here. sustaining life, energy, health, resources, communication, and transport. There are probably more. Your mileage may vary, but I broke it down into that. And I started breaking it down again and saying, okay, where can we go with that? What do we need to come up with to solve these kinds of problems? And these are just some examples I'm just showing you really quickly. And this became a concept that's a core part of our consulting practice at Exodus now, and it's so important, I thought we would trademark it. And really the idea of a space scalable company then is a company that's actually originally planned to develop a technology that is going to be originally deployed right here on terra firma and solve all sorts of interesting and vital problems here on the ground, but they also have the potential to solve a problem in space when the need is there. Now see if I can make this thing go. There we go. Lessons learned in my life. I was part of a startup called colonyfund.com back actually it started at the end of the 90s, and our idea was to get excited about all the new things that were happening in space at that time and start an exchange-traded fund. And now this thing is just flying away. But and that's actually kind of my favorite slide because this is the lesson that I learned from doing the original due diligence on a lot of the companies that were springing up back then and from then on, was that they were always saying the same thing about how as soon as we get our money, then we'll have a press release, then we'll launch our product or service, and in a couple of years we'll have that lovely hockey stick graph of profits. And it just never seemed to happen. I've got this industry is just littered with a trail of wreckage of companies that have tried to meet up to their own expectations, and it's just not gone very far. And now you'll see how the hockey stick keeps getting pushed back and back and back. This is how we kind of screen deals now. We've learned a lot from the things that we've done with my learning curve at Colony Fund, the work that we did with, and I'm
head of business development at Cavendish Trust. So I was just thinking, we had this little workshop earlier in an investor workshop, so it's going to be a nice continuation of what we've sort of started, and it reminded me of something when I sometimes go boating on my brother has a boat in Florida, and it has a little placard on there. It says, this boat runs on gas, not thanks. And sometimes it seems like the new space industry can be a little bit like that, and it still, at the end of the day, takes human or financial capital to make a startup happen. So I'm going to jump right into it. So first we're going to have Tom do a little introduction on, I guess, well, I won't ruin the. Okay. I'll let you do it.
I'll get through them quick.
Yeah.
Things over here. Okay.
So we're going to move slightly to see these slides for a bit.
Yeah.
Nope.
This has been working all day. Okay, here we go. Okay, thank you. Okay. Yeah, I call it What's an Investor to Do for Space Company. He said on the original Space Cynic. I could also call this presentation Why I'm Not Real Fond of Launch. There's a lot of reasons for that. What they see around them are companies they're still building up at the time, like Virgin and SpaceX and Blue Origin, where each one of these have been led by people who have very, very deep pockets, and they earned it in another industry, sometimes related, sometimes not, but they spent hundreds of millions of dollars in some cases of their own passion money to build what they were going to build. And that's still in a very large way the case today, although there's a lot of smaller launch companies are springing up, and they want to launch CubeSats, they want to do other things. It's not a crowded market by any means, but it's not always the most thrilling thing for an investor point of view, because they're not seeing the back end. They're not seeing the exit strategy very well compared to the opportunity cost of investing in other things. So I took a look at this, and this is kind of the things that we discuss at conferences like this, is we discuss the launch part of it. Now, which is fine. We need to solve that problem, and there's a lot of people working on solving that problem. The issue is, for me, is that we have 999 other problems that we need to solve if we're going to be permanently a spacefaring interplanetary species expanding out into the galaxy. And the other problems we need to solve looks something like that. And Robert was involved in this too, the Space Investment Summit series, which did turn for a while into a short pitch event. And now, of course, this is also what we do now with the NewSpace Business Plan Competition and the Lightning Pitch event you just saw today. All of a sudden, we're putting some real skill into trying to hold new startups accountable to certain types of core business principles, and we're going to be watching for them and helping them along in that regard. So what are the opportunities? What am I working on right now? Again, since I'm not a big guy on launch, there's a lot of other people that do that. I'm working on other opportunities, although I am involved in my consulting practice with a couple of companies. They're in the space area, which I thought were really fascinating opportunities. I'm helping them doing business planning and development and then helping them make some connections. But they're not launch companies. I'm not going to mention their names because we're still, we're still contracts pending, so we'll have to wait for the press release. But this is, my path today started with the Space Investment Summits, where I was reaching out to investors and other people in my network and saying, how would you like to attend this thing and see what's going on? And the response I always got from many, many people, the pushback I got was, space is too rich for my blood. And they say that because